Okay, recording this video on Saturday, the 18th of June 2022. It's just gone 9:05 p.m. Chicago time. Do hope you are doing well. So, if I sound a little bit crunchy in this video, it is because I'm just getting over a cold, or I think it was probably more like flu, over the last several days, which is one of the reasons why I've not put out a video in the last 10 days or so. Just been feeling under the weather. But we're at an important inflection point, so I need to get this video out and talk about that. I'm going to talk about the index charts on the daily time frames, the NASDAQ and the E-mini, and then go down the time frames to show you all the way to a 13,500 tip bar chart, what I'm seeing for the E-mini, and then just also show you the longer term and the shorter term charts for the dollar index, because we've got a turning point kind of lining up on the currencies as well. So this is the detailed view using the better indicators to look into the market, what is going on. Two ways of looking at the market. One is with price indicators and the other is with volume indicators. Oh, that was a little train going by. We've got a solar train in Byron Bay that goes by every couple of hours, and that was what was tooting in the background. So left hand side is everything to do with volume, using better momentum below the price bars, calculating the volume momentum. On the price bars themselves, we've got better Pro-Am, which is showing you the professionals and amateur activity, professionals painted in blue. On the right hand side, this is better sine wave, calculating the cyclical activity in 3 different time frames. The plate of spaghetti here below the price bars, and that allows us to plot our support and resistance lines on all 3 time frames. And what is particularly interesting at the moment is the triple setup that we've just had on the Qs. So I like the Qs for the last several months because volume wise it seems to have just captured the essence of the market, what's been going on since our topping out at the end of last year. Blue professional bars at the highs, then they sell it off, and we have exhaustion sell getting the move going. We bounce off a bullish divergence signal into short covering rally. We cause an exhaustion buy signal, tripping out a lot of volume in that short covering rally. It was so severe, and then we test back down again and go for another exhaustion pattern, mirroring the exhaustion sell to get us going. This is the exhaustion sell kind of closing us out. We got bullish divergence steps in, and on this retrace here, testing the lows or actually going past the lows of the last couple of days, you can see here that the volume pattern is really weak. So that's going to give us, not going to be a flush pattern, but it'll be probably a little divergence pattern if this holds. So Monday's activity is going to be absolutely key. We're kind of 19th, 20th of June. I mean, it would be nice if it kind of lined up with the 4th of July, because we always get a rally into the 4th of July, so we're a little bit early to kind of get that kind of seasonal pattern in there. But I think there's enough confluence kind of coming along that, you know, Monday's trade, Tuesday's trade is going to be absolutely key. So this is not a strong signal on the way down here, so this is showing us that it's weaker selling at that point, and that's why we might kind of catch here and have a little bit of a bounce. On the sine wave patterns here, we've actually got a triple going on here. You can see there's 3 reds. It's underneath that the price bar, green, but there's actually 3 red levels going on there. Support first, second, and third time frames, all holding down at that low. So this is nice because it's a pullback on to end of trend on the lowest time frame here on the daily chart, syncing up with cyclical support, which happens to be a pullback in an uptrend on the highest time frame, that thick line there, and we just overshot by a fraction the end of trend on the intermediate time frame. And I like patterns that are really tight like this. Triple patterns kind of happen together. I always say big things happen at triples. We either have kind of big bounces or big breakthroughs. So you know, hopefully if this level holds, we'll have a big kind of bounce from there, and it's because the volume pattern suggests that we're going to hold. The momentum pattern suggests we're going to hold here. Would have been nice to have a couple of blue professional bars there, and maybe over the next day or two we're going to have to put in those blue professional bars. It's the one bit that's kind of missing on these daily charts that gives me a little bit of pause. But timing wise, you know, this is a really important level here, and I think we've done enough damage on the downside that we could have a little bit of a bounce. Now what's important about this level, what have I done there? What's important about this is a pullback in an uptrend from this extremely long-term pattern. This is the Nasdaq, but you can see it on all the other charts, particularly the E-mini charts, the S&P 500 as well. This is a pullback in an uptrend, which suggests we're going for another kind of big move, pullback to end of trend on that highest time frame. So that'll kind of bring us up to test into the highs, which I think is going to be important and maybe catch a lot of people out. A lot of negative sentiment at the moment. People are, rightly so, kind of worried that this is part of a much bigger kind of decline that's happening. But I think we're actually going to go for a bounce, pull back to end of trend before that really big decline kind of comes after that, because that means that long-term trend is over. So that's the Nasdaq kind of charts. I'm kind of messed these up temporarily. Let me just fix that. This is arranged vertically like that. There we go. But on the E-mini, exactly the same thing kind of going on, but the end of trend hasn't signaled quite yet. So this is the continuous contract day and night E-mini. You can see pullback level is still showing there as resistance. We've had the cross on better sine wave going on here, but the end of trend has not gone off yet. We don't have price confirmation that that was a low that we put in on Friday. So I'm hoping that'll kind of pop up on Monday's trade, possibly Tuesday's trade, I suppose, and that'll give us a triple on the E-mini. Less convincing in terms of volume patterns here on the E-mini, because yes, this is an exhaustion level down here. It's exactly the same negative 7.5 million that we had kind of getting the move going, but it's not signaled yet. It'll happen when we get the first little bounce, and there's no blue professional bars at the lows. So yeah, to be honest, I would prefer. I think that exhaustion signal is going to go off with Monday's trade, but it would have been nice to have seen a blue professional bar kind of pop up with it. That would be really ideal, because then we've got all three indicators going together. We've got the better pro-am with a professional bar, we've got better momentum with an exhaustion pattern, and we've got better sine wave with a triple kind of setting up here. So maybe I am early. And Monday is not going to be the day when we got the bounce, and it's going to be a day or two kind of later. I know Bitcoin tends to be a little bit of a leading indicator, and right now this weekend Bitcoin is sold off kind of hard. It's bounced from 18,000. So maybe with that bounce, if that kind of continues into Sunday night, maybe that'll kind of give a little bit of upward momentum towards the E-mini futures Sunday into Monday. So something to watch out for. And we can keep on going down the time frames to see the same kind of cyclical patterns kind of coming together. But it's similar to, let me just show you the 15-minute chart. So this is 10 days ago when I talked about the markets being fractal and everything kind of coming together. This is the pullback to end of trend on the lowest time frame, followed by pullback to end of trend on the intermediate time frame, followed by pullback to end of trend on the highest time frame. Thin lines, thicker lines, thick lines. And that's rippling through the time frames there. And that was when I put out that video saying this is a really important cyclical turning point, and bang, we had a monster kind of decline. So on the flip side here, it looks a little bit different because the levels are different, but it's exactly the same patterns rippling through the time frame. So first of all, pullback to end of trend on the lowest time frame, then pullback to end of trend on the intermediate time frame. We'll have a bounce from here, and then we'll put in pullback to end of trend, possibly on the highest time frame when these lines cross. We've got a ways to go before that happens. But it's the same thing. It's rippling through the time frames. It's showing that the trending activity is exhausting itself. We go through some cyclical activity, and then we break into the next trend. So this is the trending activity being exhausted on the way down, and then followed by a little bit of kind of basing activity, and then we bounce into the next trend. So there's a little bit of more damage to be done. Pull back to end of trend on the 15-minute chart on the highest time frame here in order to test into those lows. But I think this is an important kind of point down here. So that was what I was seeing on the 15-minute chart there, which led to this decline, and we've got the flip side kind of going on. The 135-minute chart, it'll be pullback to end of trend on the intermediate time frame, and we'll have a triple kind of go off there, probably with Monday's activity. On the 45-minute chart, it's pullback to end of trend on that highest time frame when these lines cross, and we get confirmation there, syncing up with a little pullback to end of trend on the lowest time frame into those lows. We've got Rambo patterns at the lows, little blue professional bar, flush patterns going on here, so we're starting to catch down there. What do I see on the 15-minute chart? Blue professional bars down here, weak kind of selling going on. So there's a lot to say that we're starting to catch. And then the lowest time frame I look down at is the 13,500 tip bar chart, which is roughly equivalent to a 20-minute chart here. And you can see this is Thursday's into Friday's activity where we were just basing and basing. We've had our exhaustion sell, bullish divergence flush pattern, flushing out the last of the sellers. We can't get through this 3600 level down here. We've got blue professional bars kind of come in here on this bounce, and we're starting to break into uptrends. You can see all the bars here are red, showing that we're in an uptrend on this tip bar chart. So all of those reasons, I think this is an important kind of level. I'm in with a small position long at the moment, holding that over the weekend, and really getting above 3700 will be the trigger. That'll be resistance on these two time frames here. So we get above 3709, that'll be confirmation that we're breaking into a trending move on this kind of 13,500 tip bar chart. So there we go. It's the flip side. It looks a little bit different than the 15-minute chart did, 10 days ago, but it's got the same components going on. It's the volume components, the professional activity, and all of the cycles kind of coming together. So I think Monday's trade and getting above 3,700 is going to be key. Lastly, dollar index. Again, because it's a significant kind of turning point of the dollar index, that it's lining up at the same time with the equities market, I think is really important. So this is different view using the better indicators with an all-in-one kind of scenario where I'm just picking the best of the better indicators to be used on a single chart, but then I look at two time frames side by side to get an idea of the intermediate time frame and the lower time frame. So here we've got a daily chart of the dollar index and a 420-minute chart, and there are exactly three 420-minute bars in a day of the dollar index, and you can see dollar index over the last couple of months has topped out with exhaustion buy patterns and blue professional bars at those highs. So that's a really important level up here at 104, 105. Going down to this kind of lower time frame, you can see we've had triple signals go off. We've got all three non-correlated indicators come together. So first of all, we're overbought, which is the background on beta sine wave in grey here. Momentum, we've got exhaustion buy and bearish divergence kind of come in, and we've got blue professional bars at the highs, and we've broken the trailing stop behind the professional bars, and that's what's given us these two little triple signals going on here. So a little bit of sign of strength at the moment there on those lower time frame, with some red arrows up, but it's blue professional bars at that 105, 106 kind of level that's really important. So on the daily charts, that's a topping out type pattern. It just needs to work itself out and get the timing right. Let's drop down to the tick bar charts to look at a 300 and a 900, sorry, a 300 tick and a 900 tick chart, kind of same indicators, but just totally different time frames to look into the detail of what's going on here. And if you look at the highest time frame here, blue professional bars at the highs, exhaustion buy, bearish divergence, we're starting to roll over. We get triple patterns, signals short because we're overbought here, and we kind of fall off. Going down to the 300 tip bar chart, exactly the same thing going on. We push and push and push, can't get through, and we get triple signals and we drop away. I know we've had one little triple signal kind of going the other way, but all we need is that 104 level to be broken on the downside, and that will be negated. So there we go. That's what I'm seeing on my charts. I think Monday's activity, Tuesday's activity, going to be absolutely key. See what goes on there. I might be early on this because seasonal strength coming into July 4th is really important, and we just might be a little bit too early for that. The turning point might not happen this week. It might be the week after, kind of leading into that July 4th. But I think there's enough information on the charts right now to suggest that Monday, Tuesday going to be key. So we'll wait and see, and I hope your trading is going well.